Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a temporary tariff-related sugar rush. First up today, the US administration says it will delay the imposition of the latest extra 10% tariffs until the end of the year. The move is to allow US retailers to stock up on the end of the year holiday selling season and prevent sticker shock going into a key re-election period. Even though the unilateral US move won't fix any trade or currency issues, the market relief was palpable. The S&P 500 has regained all it lost yesterday, up 1.8% so far, and the oil price jumped too. American consumer inflation rose at the rate of 1.8% in July as well, its average rise in the past year. Core inflation is up 2.2%, that's excluding food and fuel, driven by rent and medical care, both of which are up more than 3.3%. In the US, two of the major car manufacturers are reported to be planning for an economic downturn. In China, they released data that appears to show that foreign direct investment in the country is rising at a faster rate, up 8.7% from the same period a year ago. A lot of that is via new free trade zones. In Japan, machine tool orders are still in the doldrums, down a whopping 33% in July from the same month a year ago. Still, that was a smaller drop than they reported in June. In Germany, their influential ZEW Business Sentiment Survey has come in much more negative than was expected. And in Australia, their latest NAB Business Confidence Survey isn't as bad, but it isn't great either. They are seeing below average confidence and conditions, with the business sector losing significant momentum since early 2018, and forward-looking indicators don't point to an improvement in the near term. The US Treasury 10-year yield has firmed by 1 basis point to be just over 1.67%. Their 2-10 curve is now almost completely flat, now at just plus 2 basis points, and their negative 1.5 curve is much wider at 29 basis points. Bond investors aren't buying into the latest tariff change optimism. And gold is down $4 today at $1,501 an ounce. US oil prices are up strongly, up by more than $2 to just over $57 a barrel. The Brent benchmark is now just over $61 a barrel. And the Kiwi dollar is marginally weaker today at 64.5 US cents. On the cross rates, we're half a cent weaker at 95 Aussie cents. Against the euro, we're actually firmer at 57.7 euro cents. That puts the trade-weighted index at just on 69.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.